I do see some risks for global share markets. In particular, we know that valuations in the US share market are really high in terms of PEs, ratios of PEs to bond yields. Bond yields have been going up since mid-October of last year, so too have share market valuations. Ultimately, that's unsustainable. Something that struck me is that the US share market capitalisation as a proportion of the world is now very similar to what Japan's share market capitalisation as a proportion of the world was on the eve of the collapse of Japan's bubble at the end of 1989, and we know where that led. It seems to me that the US market is pricing in all the good news that there could be about the US economy, partly based on its good performance over the last years, partly based on expectations that President Trump's agenda of deregulation and tax cuts will boost productivity and the like. We've seen, just as a warning, how markets might react if some of the enthusiasm for artificial intelligence and the US lead in that area turned out not to be true. So I think there are downside risks to the US market, and if they came to pass, then there'd be downside risks for other markets as well.
And Australia would be resilient to that?
In some respects, yes, because, for example, we don't have much of a tech sector in the Australian market. On the other hand, Australia's market is overloaded by comparison with other markets, with mining companies and banks. There are clouds over the outlook for mining companies because of the ongoing sluggish growth in China and the vulnerability of the Chinese economy to aggressive trade measures pursued by the United States. 6% of Australia's exports go to China. That represents more than 8% of Australia's GDP. Something that adversely affects them would affect our economy and the prices of the companies that export lots of resources at high prices to China. In the same way, if bank share prices were to be marked down in the US as part of a more general downturn, even though there aren't nearly as many risks associated with US banks as there were on the eve of the financial crisis, and there aren't many risks associated with Australian banks as a result of their exposures, nonetheless they'd probably be caught up in it. The other, I think, serious and underappreciated risk for almost all financial markets is the enormous run-up in the prices of cryptocurrencies.